Hello and welcome to Questa Plus podcast with me, Robert Miller from Telegraph Talk, and our top tipster, Gary White. Very happy New Year, first of all, Gary.
And Happy New Year to you.
When we talked before the holiday, your parting words were watch out for profit warnings from retailers. Well, it's come to pass, hasn't it?
And there will be more to come. We've had warnings from Alexon, HMV, Mothercare, Clinton Cards and Theo Thanel. There will be value in the retail sector in the next few weeks, but now isn't the time to go fishing. I think let's wait a few weeks and see what comes out. But there will be buy opportunities, I suspect, in the retail sector sometime over the next month.
Okay, but hold your horses for the moment on that one. Can we now turn to oil? It's a subject we've looked at before, but is it possible that oil will reach $100 a barrel?
I believe so. Nothing is certain, obviously, but I would make a strong bet that oil will pass $100 this year. We're talking about US oil, not Brent crude. Brent crude trades about $5 higher than US oil, so it's already at about 95. We've got another 10% for WTI to get to $100. I think it's definitely possible.
OPEC, 60% of the world's oil production, they've said that they won't increase their quotas and output. Do you think they might change their mind?
Well, they haven't got another meeting scheduled until the middle of the year, 2nd of June. And so they're not going to increase quotas till then. This comes at a time when demand is increasing. Inventories in America have been falling. We've had some really positive manufacturing data from all over the world over the last couple of weeks. So demand is increasing, supply is not. That usually means prices will rise.
How are you going to play this then in share terms?
Hello everyone, welcome to Global Government News. Today is Thursday, January 6th, 2011, and I'm Darko. Welcome to this economic news bulletin. New listeners, please go to my website, check it out. I post all my videos there, plus I usually have a poll that you can check out. I just updated website as well. There's some new information on there, pictures and that. So anyways, it's GGNonline.com. That's www.ggnonline.com. And so you just saw that video about oil possibly hitting $100 a barrel. We're going to move here to rising oil prices derail global economy. This seems to be in the news I found when I was searching for news articles. The International Energy Agency, or IEA, has warned that increasing oil prices are entering a danger zone that could threaten the fragile global economic recovery. Quote, oil prices are entering a dangerous zone for the global economy, chief economist, what is this? It looks like it's supposed to be Faith, but I'm not sure, Barrel, from the IEA told the Financial Times newspaper on Wednesday, quote, the oil imports bills are becoming a threat to the economic recovery. This is a wake-up call to the oil-consuming countries and to oil producers, he further explained. Oil prices have edged closer to $100 a barrel in recent weeks, and Brent crude hit $95 a barrel for the first time in 27 months on Monday. Oil drops 2% as dollar rises, awaits job data. Oil prices tumbled more than 2% on Thursday to below $89 a barrel as a stronger dollar and weaker U.S. equities deterred buyers. Oil markets fell back as Wall Street dipped on disappointing retail sales, and investors turned cautious ahead on Friday's U.S. employment report for December. Keep moving here. The dollar assets should be cut, says official. China should cut holdings of dollar assets to limit losses on its foreign currency reserves while letting the yuan move more freely, a former advisor to the People's Bank of China said in comments published Wednesday. And I covered an article coming from the same website, the People's Daily Online, about a month ago that said that both Russia and China we're going to be dumping the dollar with bilateral trade. So move on here to a Reuters article. Euro slides to 5-week low versus dollar jobs data eyed. The euro slumped on Thursday to its lowest level against the U.S. dollar in 5 weeks and briefly breached a key support level, but more losses are seen likely if upcoming key jobs data proves stronger than expected. Boon to the yuan again. Yuan to rise 5% in 2011. China has set the yuan's midpoint versus the U.S. dollar at 6.6295 this morning. That's slightly weaker than Tuesday, which was a record high for the third straight trading day. Gold falls on improved outlook, payrolls eyed. Gold fell for a fourth consecutive session on Thursday as the dollar rose on signs the U.S. economic outlook was improving, but technical buying lifted prices off their lows. Next one up is a jump in hiring sends bonds lower and stocks higher. A surprising jump in hiring sent bonds prices lower and lifted $1 Wednesday. The Dow Jones Industrial Average edged higher for the third straight day of the new year. And it says here, first one bond for the World Bank. The World Bank announced on Tuesday it was going to issue its first ever yuan-dominated bond. The 500 million yuan, or $76 million 2-year fixed-rate note due on January 14, 2013, offers investors a semi-annual coupon of 0.95%. It is the first yuan bond issuance in the Hong Kong capital markets in 2011. The transaction comes as China's shareholding in the World Bank is set to increase as part of a realignment of voting shares announced in April 2010. For jobless claims are up, underlying trends still down. New claims for jobless benefits moved higher last week, but a decline in the 4-week average to a nearly 2.5-year low suggests that the labor market continues to improve. Jobless claims increase. The number of U.S. workers filing new claims for jobless benefits rose slightly less than expected last week as the labor market continued along a slow path towards recovery. It says initial unemployment claims rose by 18,000 to 409,000 in the week ended January 1st, the Labor Department said Thursday in its weekly report. The previous week's figures were revised upward to 391,000 from 388,000. Economists surveyed by Dow Jones Newswires had expected claims would climb by 22,000 to 410,000. So this is from Bloomberg. Fewer jobless claims filed in the U.S. over past month as labor market revives. Fewer Americans filed claims for unemployment insurance payments over the past month, indicating the labor market is improving. Now, remember I pointed this out. If people aren't filing for benefits anymore, it could mean that there's just a possibility. I mean, maybe, sure, employment is picking up, but there's still people that are unemployed that can no longer collect benefits. So just because there's the people that filed for them or receiving them went down doesn't mean that there's still that people that were unemployed are now employed. They could still be unemployed. So just have to put that out there. It says here, economists raise U.S. payroll forecast on ADP. Goldman sticks to estimate. Economists are raising forecasts for the number of jobs added by U.S. employers in December after a report yesterday showed the biggest jump in company payrolls since records began in 2001. And this is from the Wall Street Journal. Modest pay increases expected in year ahead. Companies to raise salary budgets, a median of 2.8%. Energy and life sciences to see biggest gain. And it says here raises in 2011 are set to be better than last year, but not by much. Companies plan to raise their salary budgets a median of 2.8% in 2011 after giving a median 2.4% raises in 2010, according to a survey by management consulting firm. So what is that, 0.4%? I wonder what that actually equals out in the salary, like an extra $100. December retail sales, and that's not going to cover all the inflation of costs, food costs, energy prices. December retail, and all the tax increases. December retail sales show shoppers still wary. Man, look at that picture. When I saw that, I was like, I got to cover this. This is wild. Anyone thinking Americans might be back to their free spending ways got a reality check on Thursday, as many mainstream retailers reported disappointing December sales. And it says while some stores chains cited a blizzard that hit the East Coast after Christmas, investors seem more concerned that December sales showed that consumers have still not returned to spending habits seen before the financial crisis, and that they will continue to be frugal. Well, the thing is that they're kind of being told to be frugal in an indirect way. There is such thing as a culture industry, and it's usually the media that is at the forefront of it, and they're telling people, they're preparing them to basically live in poverty, which is makes sense because we just happen to get to this article, U.S. poverty higher than expected. Well, like I said, it's all by design. This whole economic crisis bubble, all these bubbles are all done on purpose by these banks, these investment banks, commercial banks, and they always walk away unscathed, still standing with fresh injections of taxpayer cash, and the consumer and the small-time investors that really do want to invest in the long term, they end up losing their wealth and their investments and their pensions. And so there was actually an article that I came across on from Time CNN today that I should be able to cover, and it talks about preparing for homelessness. It was actually an article, it was literally talking about preparing for homelessness. I mean, so they're getting people ready for it. And what was the biggest word last year? What was the most used or most common word of the year in 2010? It was austerity, right? Because that should tell you right there that was the programming. Programming is for mind control. It's to get it and embed it into people's consciousness or subconsciousness that austerity is here. So get ready, roll up your sleeves and tighten your belt, as they say in Europe, right? U.S. poverty higher than expected, report says. Statistics reveal that the number of poor people in America, particularly senior citizens, is millions higher than it was previously thought to be. Recently released preliminary census figures indicate that 1 in every 6 Americans, mostly a senior citizen, is living in poverty. The Census Bureau News report shows that 47 million people in America are struggling with poverty in comparison with the previous 2010 rate of 43.6 million, most of them 65 years of age or older. So I might as well just get to it, right? Shout out how to prepare for homelessness, and you can check this out. The link will be posted. This came out yesterday. And so you prepare to be homeless longer than you think, and remember to pack your self-esteem as you've been robbed and raped by the bankers. Census, number of poor, maybe millions higher. The numbers of poor people in the U.S. is millions higher than previously known, with 1 in 6 Americans, many of them 65 and older, struggling in poverty due to rising medical care and other costs, according to preliminary census figures released Wednesday. At the same time, government aid programs such as tax credits and food stamps kept many people out of poverty, helping to ensure the poverty rate did not balloon even higher during the recession in 2009. President Barack Obama's, and that's basically redistribution of wealth. I mean, if you're going to have a big mega state government, you might as well have the welfare state. It sucks, but I just honestly don't see there being a state without a welfare state. I don't think that's the biggest problem. I think the biggest problem is that, like I said, the corporations have corporate limited liability status. You have things such as the FDA or the SEC, and they're all made to basically protect the corporations, protect all these private interests. And but I think we know where most of the money goes to, right? And that is in the form of the Federal Reserve and the defense contractors, basically war. So, and surveillance and security, right? That's where most of our money goes towards. So a lot of people will end up fighting over the welfare state, but that's really not the problem. The problem is basically forcing the states to expand Medicaid or Medicare when they don't have the money. Because, like I said, this is all being blamed on the housing bubble, but I think it goes a lot deeper and a lot further back than that. And so they're just blaming it out now, and they're just forcing the states, and the states like South Carolina are now saying no, and they're writing legislation saying, we're not going to do this, we're not going to comply with the federal health care bill. So, but anyways, so we're going to keep moving here and finish up with this video. IRS tax liens jump by 60%, but how effective are they? IRS liens filed against taxpayers jumped 60% since the start of the national recession, according to a new federal report that urges the tax agency to moderate the collection policy and study its effectiveness. The IRS filed more than 1 million liens in the federal fiscal year 2010, the highest in nearly 2 decades, and a spike from nearly 684,000 filed in the year ahead of the recession's December 2007 start, according to an annual report to Congress issued on Wednesday by the National Taxpayer Advocate. Bond sales set record as GE leads $48.2 billion credit markets. Company bond sales in the U.S. surged to the most on record this week, and relative yields on investment-grade debt shrank to the narrowest since May as investors boosted bets that economic growth is gaining momentum. Here we go. Geithner urges debt limit increase, warns of consequences if no action. Again, this is like 2008, the stick-up, where you get stuck up by your own Treasury Secretary, like Hank Paulson. Give us the money or else we'll shoot ourselves. Treasury Secretary Timothy Geithner said lawmakers must raise the federal borrowing limit in the first quarter of 2011 or risk a default on U.S. debt and a loss of access to global credit markets. So it's all about scare tactics and fear tactics. Central bank chief warns of inflation risk. And we're going to continue with part 2 of the Economic News Bulletin next. This is GGN, and I'm Darko. Thank you.